All right, guys, what's going on? It's Brandon. I got a bit of a beard going on. I wanted to talk to you guys about what I have figured out, I believe. All right. When 9/11 happened, I had certain clues at my disposal, but I would have never guessed that something like 9/11 was going to happen. But I had certain clues. I knew that something was going to happen, which was going to cause airline stocks to fall, because of a clue that I'd gotten from somebody who's way high up in things. I didn't understand what was happening, though, why they were making that prediction. In 2008, I didn't see the financial crisis coming. And by the way, that wasn't a financial crisis for the banks and Wall Street. They got more wealthy and better set, because what they did was they programmed you all that you have to bail them out and you have to print money to bail them out when bad things happen. So that was what was accomplished in 2008. Is now you have, it's like a checklist. They have to check off certain things to get the perfect recipe together. So they had to get to where the masses believe that you have to allow the printed money to be given to the banks. And now what they're doing is they're showing that if you give the printed money to the banks to lend out to inflate the stock market in China, oh, that saves an economy too. Okay, so they're programming you guys with these step-by-step things, and what you don't understand is it's all magic tricks. Okay, the 2008 crisis was caused because they were loaning everybody under the sun loans, and then the big banks on Wall Street swapped through these derivatives. They swap away their ugly debts and they put it on the small banks around the United States. And then the small banks around the United States and institutional investors who bought up these swaps, and mom and pops people who bought these things, so the regular civilians, the retail buyers who bought up all these swaps in these containers, okay, because it was like, here's this bundle, okay, this basket of things, and each basket contained a little bit of poison, okay. So then at that point, the big banks on Wall Street were all fine. The hedge funds on Wall Street were good for the most part. Okay, not all of them, but most of them, the ones who were in the know, and all the other ones got burned, okay? So that's a way for the banks on Wall Street to gain more traction across the United States. So when you look at Chase and Bank of America, they have been systematically expanding across the United States, okay? Where once upon a time they weren't supposed to. Chase bought out Bank One, which is a big controversial thing back when I was like in high school, out of high school, that was going on. These different things are going on, but the point is this. This is a really bold claim, but I feel like I can predict the next 9/11 and the next 2008. I can predict the event that's going to how it's going to go down. And it involves a black swan event, something like the attack of China threatening heavily to attack Taiwan, or going ahead and attacking Taiwan. And you say, well, yeah, we all know that. No, but what you guys don't understand is this. You guys don't understand there's way more to it than meets the eye, okay? So there's that guy on Facebook and YouTube. He's got like black hair, and he's always talking about the conspiracies where BlackRock and all these different things, the alleged conspiracies, I should say, where BlackRock and State Street and Vanguard and all these people own everything, and he does these educational videos, and I post them up from time to time on my Facebook. And his channel is called Cancel This Conspiracy or something like that, but or Cancel the Conspiracy. But he's had to continue to create new channels because his channels keep getting shut down. But the point is, he made a great video a while back that brought my attention to just how many swaps the banks on Wall Street, the hedge funds, Sachs, Goldman Sachs, what do you call it, JP Morgan, all these big players on Wall Street, how many trillions of dollars in derivatives they have. Like Goldman Sachs, as of like a year ago, had 50 trillion in derivatives. And a lot of those are swaps. And the interesting thing about swaps is they don't have to disclose what their position is on anything. So whether it's the futures exchange, the options exchange, the interest rates exchanges, they don't have to disclose anything. Now, one thing about the futures market, guys, something you have to understand about the futures market and options market and all these different things that facilitate the meat and potatoes behind the swap, because the swap is swapping the meat and the potatoes, if you will. But how do the meat and potatoes come to exist, right? So the futures, okay, options like calls and puts, these different options are basically issued, okay? And who they're issued to, there is record of. So if you're the world banks and you know that you're going to have a black swan event, you're the world, not even the world banks. There's another layer behind it. There's the people at the tip top who are behind the banks, okay? So you're the people at the tip top, and you know that there's going to be a black swan event. You can create the black swan event anytime. You just want to create this black swan event like a 9/11 where you can bet against airline stocks and make a fortune. Now, there were a lot of unusual activity in the puts, people placing puts against airline stocks, the weeks leading up to 9/11. Now, there's record of those things, and then the public demands the FBI investigate it, and then there has to be huge bribery behind the scenes, huge persuasion behind the scenes to try to get the FBI and the SEC and all these people not to report who actually made those put, and that's what they did. The 9/11 Commission and everything, they didn't want to tell you who made all these puts and everything. They're like, oh, it's too hard to solve. It's not too hard to solve, but what they don't really want you to realize is they didn't want to tell you the truth that the derivatives market is where you really want to look, because that's where 99% of the meat and potatoes are. Because what happens is in the derivatives market, you can get a lot of meat and potatoes created if the market is in a specific range where those meat and potatoes are created. So let's translate this into simple terms, okay? Let's say that I'm just going to make up fictitious numbers, guys. Let's say that Alibaba should be trading at $100 a share, okay? And let's say that you know that next market crash, it's going to go down to 20. And so you say, well, how can we get a whole bunch of meat and potatoes, calls and puts, created at $20 a share? Well, what you have to do is you have to do things that intentionally screw up markets. Things like COVID, okay? Things like the 2008 crash. Things like crazy politicians, things like super high interest rates, things like printing lots of money and giving the money to these big institutions who then run around and buy up all the mom and pops places who are failing, so that the little people, the private companies that aren't owned by the people at the tip top yet, whoever they are, I'm not going to say who they are. I don't know who they are, but the point is, whoever the people at the tip top are, whatever they don't yet own, they want to give themselves the ability to buy up all these smaller mom and pops, okay, private businesses. Now, okay, so what you have to do is you have to lower the stock market. And to lower the stock market, you have to come out with things that enable the stock market to be lowered. Things like synthetic shorts, okay? So these, where you can take out a short position on a stock, a naked short position on a stock, and then someone else can take out another naked short position using that same share, and another person can take out yet another naked short position on that same share. And next thing you know, you have 4 short positions based on one share. So then when that share gets called back, you have this super squeeze, right? So we have all seen what's going on with these different things, right? We've all seen it. Before this video gets cut off, I want to say that in the next 2 weeks, the Black Swan event could happen. Now, I'm not going to say that it will, but I will say that it could, and that the elites could generate record profits for themselves, trillions and trillions of dollars, and I'm going to explain why here in a second. Okay, the people who are in the know, I'm just going to call them elite, okay, but the people who are in the know, the people at the top of the pyramid, So here's a fun, crazy fact that I realized this week, which I would have never realized had I been at a 9-to-5 job, had I been doing whatever I was doing. I would have never realized this. And I was working for the last several months. And then all of a sudden, my gut was just screaming at me, you've got to get involved in the stock market again. You've got to get involved in the stock market again. And I'm like, I don't want to. I just want to work, make a regular living, not be stressed out about trading every day. I don't want to be involved in the stock market, but my gut was just, and to me, I thought it was like an addiction. And I'm like, no, I'm not going to do this. But then it's like that really pure voice inside me, because I was eating healthy. I was doing everything right. I never drank or do drugs. So I was completely in tune with the universe, if you want to call it that, God, whatever you want to call it. And it basically said, you need to get back in the stock market. So I had some money that was owed to me and went and started pursuing that. So I got back in the stock market. Been playing with the options exchanges a lot. The point is this, let me just say this. All of mainland China, for the most part, not all, but pretty much, okay, the Shanghai Stock Exchange is what mainland China trades. They're not privileged to trade with the Hong Kong Stock Exchange. The regular common people of China cannot trade with the Hong Kong Stock Exchange. Now, they can use ETFs. And this past week and the weeks prior, maybe now they're starting to, because they're realizing that's the only way we can trade the Hong Kong Stock Exchange, is use ETFs. ETFs have clear disclosure statements saying these are high risk, they can be collapsed at any time. You can end up with zero money at any time. That's what the ETFs say, guys. So, in all the fine print of any ETF ever made. So as some of you might be aware, the winner of the past several days in a row, the last couple weeks, several days, is the stock ETF, ETF YINN, yin. And yin is betting on the Chinese stock exchanges to go up. And it bets on it at a 3x leverage. So if the Chinese stock exchange goes up, 7%, this thing goes up 20%. Okay, and that's happened several times in the last few weeks, or the last couple weeks. And so I'm sitting there watching for it, and I was waiting for it to fall back down. But what I realized is they've created the ultimate short squeeze. They've created the ultimate short squeeze where all societies who believe that printing money can't solve a problem are betting against the Chinese stock market right now. But what people don't understand is the real primary reason why the Chinese stock market is going up is because if you go out to like a multi-year graph, there's a trend line for the whole entire Chinese stock exchange that was a downward diagonal, and it just broke that in September, mid-September, beginning of September. It just broke that. So mid-September. So once they knew that that was broken, then they had to create the magic trick of, let's tell the masses, because they knew eventually it was going to break. They knew that the downward diagonal couldn't last forever. They knew that once that breaks, they need to be able to lower interest rates and print money. And they knew that if they could lower interest rates and print money when that situation happens, then they can Jedi mind trick the masses into thinking lowering the interest rates and printing the money is what created this. Now, they only lowered the interest rates a little bit, but they printed a good amount of money. Now, the interesting thing about interest rates is you can't go below zero, right? So to be able to lower the interest rates, to be able to have that ammunition to be able to lower the interest rates, you've got to first raise the interest rates, which is what they had to have the first inflation for, which is why they had to have the first money printing of COVID, okay? They had to lock everybody up. So now they're doing it all again. The what do you call it? The unions, okay, are locking everything up, creating scarcity again. All the ports are getting locked up, okay? So the scarcity is back in effect. They're going to start printing money again. But what they're doing is they're creating inflation, because if they can create inflation, right after they lower the interest rates a little bit in America, and right after they lowered interest rates a little bit in China, then they could say, oh, we need to raise interest rates even more. Because if you can raise interest rates even more, that allows the banks to make money fair and square, if you will. They're making money on interest of all the loans between people. But back to this derivative swap thing. To be able to go unnoticed and make money hand over fist multiplied by hundreds and hundreds fold, to be able to do that and go unnoticed, you have to have $600 or $700 trillion in derivatives held on the balance sheets of Goldman Sachs and Chase and all these big super banks, right? Then, in the 11th hour, right before the black swan, the key individuals want to obtain those swaps from the big super banks. And there's virtually no record of this that us, the masses, have access to, because at that point, we, the masses, might have issued the original calls, the options. Okay, we used our money to issue the options, the calls and puts. Then we end up selling those away. We trade them away, okay, once we start to see that things are headed in the wrong direction against what we had hoped, we trade them away. And then once we trade them away, who buys them up? The big institutions, right? The big institutions may choose to buy them up, or they might say, oh, those are worthless. But the point is, since the Chinese stock exchanges and since the American stock exchanges and everything have been lower than where they currently are, because now everything's starting to rise, we, the masses, pay no attention to all those calls and puts that were for the lower market, for the lower range. We're walking away from that now. We're going up and up and up and up, both in China and in America. And what's going to happen is, once we break this next trend line to go into super hyperinflation, once we break this next trend line, we, the masses, even if we don't break the big super trend line, there's a big super trend line on the New York Stock Exchange, and I've talked about this, and it's a diagonal upward line. And if you go out to a 100-year chart, you'll see it. And we're just about to break through it. We've never broken through it before in history. Every time in history where we approach it, everything always goes down big time, okay? Because anyone with any common sense says it's never been broken before. I'm not going to wait around to see if it's going to get broken this time. I'm going to go ahead and pull my money, because even if it's a 50-50 coin flip, I'm going to go ahead and take my money, and if we end up getting above that, that's fine. Then I'll reinvest my money once we get above that. So I've been saying the world leaders, the elites, want us to go into hyperinflation, where if they can get the stock market to break that diagonal upward trend line, which to you, diagonal up is this way, okay? But the point is, if we can break that diagonal upward trend line, then basically we can, we can go into hyperinflation, because now the stock market's increasing at an even more rapid rate than it was before. So if the trend line that we already had was regular inflation, when we go up to the other trend line, now we're into hyperinflation. So if we can break above that'll now be the support line. Instead of the flat line being support and this being the top line, now that becomes the support line, and there's an even steeper line, which is the top line, and up we go into hyperinflation. Now, I've been explaining that I think that everything can be gamed and stolen, regardless whether it's Bitcoin, regardless what it is. I've explained that everything can be gamed. And now what I'm realizing is the world leaders at the very top, they don't care what it is. They're going to own the most of all of it. It doesn't matter if it's Bitcoin. It doesn't matter if it's, ETFs. It doesn't matter if it's physical gold. It doesn't matter what it is. They're going to own the most of it. That way, their wealth is super up there, proportional to the rest of the masses' wealth. Now, what you guys don't realize is everybody's about to lose everything. Everybody's about to lose everything. The masses in general are about to lose everything. Almost everything, within reason. And the way that the world leaders can do this is because when all of a sudden the black swan event happens. Now, I want to stress something here before I forget this, because I keep tangenting too much. This next week, the China mainland is finally, starting on Tuesday of next week, China mainland is finally allowed to start to purchase stocks again in the Shanghai Stock Exchange. Imagine being a Chinese civilian or even a professional trader and sitting there wishing, the fear of missing out, the FOMO, sitting there wishing for over a week, 2 weeks time, well over 10 days time, right? 15 days time, I think it is, but it's like 10 days time when you count the weekends and everything, at least. But the point is, you're sitting there wishing that you could participate in this run-up of your economy, and you're not able to buy. And then the question is, when I buy on next Tuesday, is it too late or is it all going to crash? So let's say half the population says it's going to crash, it's too late, and the other half the population's still optimistic. It's still 1 billion fucking people. All okay, and I want you to think about this for a second. China said, ooh, they printed $150 billion worth of money and issued credit and put that and injected into the stock market. Look at what it did. Guys, if you have 1 billion people and each one only puts in $150, that again is $150 billion. What I'm getting at is this. Right now, we're at the top. We're at a trend line. We're at a line where if you zoom out on Alibaba and you zoom out on JD, okay, and these other companies that are the primary things that make the Chinese stock exchanges as big as they are, like Nvidia is our big one. Alibaba and JD and a few of these other ones are China's biggest ones, right? Along with Nvidia and these other things that they trade. If you zoom out, you will see that the peak that we got to last night while China's markets were open is exactly the peak of the previous peaks. When you zoom out to like years and you look, you'll see where there's other peaks on the year chart. So normal common sense is after a market runs up, it turns around and dips for a minute, even if it's just for a day or two. Common sense says it turns around and dips for a minute to retest, and then it goes back up. So the people who are used to shorting a stock or shorting a stock exchange, okay, or buying a bear ETF, okay, which is Yang, Y-A-N-G, these people then buy these bear positions believing that they're going to profit on the way down because we just hit the trend line. Now's the perfect time to bet against it. What do you want to bet? That if this doesn't go below it and instead it stays on par with it through the next couple days and doesn't dip in the next couple days, which it might dip a little bit in the next couple days, but even if it dips a little bit in the next couple days, what do you want to bet by next Tuesday when their market opens back up? We're back at the trend line and now they have a decision to make. Or what do you want to bet? We're just above the trend line where there's no longer a decision to make. And now these people are betting on the stocks to rise. And even if they don't bet on it to rise, if people start doing shorts and all these different things, or even puts, they're doing puts, right? You want all these people to be issuing the calls and issuing the puts down here in this range. Why? Because we're about to go a whole lot higher. How are we going to go a whole lot higher? Because there's about to be a massive short squeeze. Because you heard what I said. We're going to go above that trend line sooner than later. There's going to be a bunch of negative bears who get trapped. And up China's economy is going to continue to go. Up their stock market is going to continue to go into a super squeeze. Okay? Now, you got to be really careful playing with the triple ETFs, the triple leveraged ETFs, because if the stock market moves 30% in a day, you can lose everything. Because 30% times 3, 33% times 3, is 100% basically. And you can lose everything if things swing the wrong way. So they're programming everybody to fall in love with these yin and yang ETFs. But what you don't realize is they don't even have to cancel the ETF. They can take all your money fair and square. You've lost everything, okay? So the more people who put money into the markets and the more people who start trading options, the more meat and potatoes that's being issued, where there's no record of it being issued to Saks Goldman Sachs or JP Morgan Chase or any of these guys. There's no record of that. There's no record of it being issued to the hedge funds on Wall Street. Instead, the only thing that there's record of is us, and then it eventually being bought away by who knows who, and then it goes into swaps where it gets swapped. And so what do you need? You need all these big things that are owned by BlackRock, State Street, Vanguard. You need a big swirling pot where it gets exchanged around and around and around and around. That way it doesn't look, it's like a blender, it's like a washing machine, it's like you're mixing the card deck up. That way the average civilian can't keep track of these 600 plus trillion swaps, 600 plus trillion derivatives, okay? Which is already what happened in 2008, but now it's way worse. And the reason being is because then, before the next Black Swan event, the people at the very top who know when the Black Swan is created, they can cherry pick. And there's not a limit to how many meat and potatoes, how many puts there are way down here. Okay? There's no longer a limit to how many meat and potatoes puts are way down here. There's also no limit to how many calls are then way up here, because they're going to take it way down first, make the masses think that the world's ended, and then they're going to do what you least expect. They're going to turn around and then they're going to make money on the upside again, and all the calls that were issued up here where we are right now are going to come back into play because they're going to be able to buy those for pennies. And so now they're at the horse track and they're multiplying their money times 100-fold. So they're betting on everything to fall big first, and then they're betting on everything to go up. Okay, but understand, things are going to continue to go up here as mainland China comes on board. But I wouldn't be surprised if once mainland China puts their money in, if the Black Swan didn't happen the same week. It wouldn't surprise me at all. Could it be 2 weeks later? Could it be 3 weeks later? Sure. But is this Black Swan event going to happen within the next half of a year? I would say absolutely. I would say absolutely. They're going to let, all they have to do is they just have to get it high enough to where now it's pennies down here on the puts that were all issued in the last year. The long-term puts that were issued in the last year. That's all they need to do is make this pennies so that they can dive the market, buy those, or buy those, dive the market, those puts. Then, once they make that money, they use that money to buy the calls that are up here. And why is it going to go back up there? Because they've convinced you guys that hyperinflation is a good thing. They've convinced you guys that printing more money is a good thing. Because the average civilian is not that smart, which we've proven with these vet titans groups and people not able to understand how the Corvettes work. Okay, so this whole thing has been a big social experiment for me to really realize exactly what's going on and following my gut in life. My gut said to create this vet titans group. My gut said to start trading the stock market again. I would have never found out these little intricacies about the fact that China mainland wasn't trading during their stock market run this week to know that, yes, the market's going to continue to run next week. See ya.